Jimmy, how you doing?
I'm doing well. How are you, man?
Good, man. Thank you so much for taking the time to do this. We'll jump right into it. The point of this kind of AMA series is for me to ask questions of some of the smartest people in the space, and you definitely, I think, are one of the smartest educators in the space. I look up to you so much about how you think about Bitcoin and your values around Bitcoin. So, thank you so much for taking the time to do this with us today.
Yeah, well, thanks for having me, obviously, and yeah, glad to be of whatever service I can with
I love it.
what
So
you're
I, I,
doing.
I, I think a great first question is, what is Bitcoin?
Yeah, Bitcoin is digital gold. It's money of the internet. It's basically a lot like gold in the sense that you can have it, and if you possess it, then it's yours. There's no central ledger or getting the approval of the bank or credit card system or anything like that. It's just you possess it. It's a bearer instrument, kind of like gold. There's no central authority or anything like that. And you can trade it, but unlike gold, it's digital, and it allows you to transfer this thing all over the place very easily. And that's a lot easier than physical gold because transporting physical gold can be very difficult, especially if it's at a very long distance. So that's basically what it is. And unfortunately, people tend to complicate it a lot more with talk of crypto and all this other crap that's not really the same. But at its heart, it's a better digital gold, and that's the way I tend to describe it.
And why is it so important in this new age to have a version of digital gold? Why is Bitcoin so important for this day and age?
Yeah, and this is where it gets to be a little trickier because until you understand how money actually works today, none of this other stuff is going to really register. So the way money works today is that people think it's backed by gold or something like that, or they think they understand money because they use it every day, have savings or whatever. But most people don't actually know how money works. And the way money works is that there's a central bank that decides, how much money that exists through essentially loans and things like that. And your money is sort of like it's an entry on like a bank ledger for the most part. Now, if you have cash or whatever, it's a little bit different. But for most people, they have some sort of account at a bank, and that's where you keep your money. And they give you permission to, spend it or transfer it or whatever, which essentially gives them all sorts of ways to control you. So the reason why Bitcoin is so important is because it's permissionless money, and there's no sort of like trusted third party or somebody in the middle that can censor your transactions, that can take away value through inflation, through um, regulation, and so on. And that's the really important thing, because every transaction that you execute on the market that's not Bitcoin related essentially has an implied third party at the most of the time it's explicit. So when you go and buy something with your credit card, the credit card company is that third party, and they can deny your transaction if they wanted to, and the bank can take your money away if they accuse you of being a drug dealer or something like that. That uncensorability, that permissionlessness around money is the freedom that we're taking back with Bitcoin. And in these days of heavy inflation, where the official number is somewhere around 9%, but really it's significantly larger than that in terms of the monetary supply. Avoiding that is a very important part of your savings and self-sovereignty.
And when you talk about inflation, as a Bitcoin is a potential hedge against inflation. What do you say to people that, they see the price of Bitcoin going down and they're like, wait, I thought this was supposed to save me from inflation, but the value is going down. Like what do you say to somebody like that?
Well, the thing is, it's going to react to the monetary policy of that you're measuring it against. Fact of the matter is that the U.S. dollar, while it was expanding like crazy during the early days of the pandemic, Bitcoin went up because there were more dollars in existence. So the inflation numbers that we are getting right now, this is like what essentially happened like 12 months ago, right? Like that's what we're measuring. It's how much did the prices go up? We're looking backwards at it. But while it was happening, Bitcoin was actually going up quite a bit. In the early days of the pandemic, March of 2020, Bitcoin was around $3,500. It's currently at 20,000. So you can tell that, it was a very great inflation hedge. It's just that, the inflation numbers that we're getting right now, it's what happened 12 months ago. Now, why did it go down? It went all the way up to like 60 something thousand dollars, and then it came back down. So what happened? Why is it much less now? Well, the U.S. tightened its monetary policy. So essentially, over the last 6 months or so, or 12 months, inflation was starting to show up in a lot of the statistics, and the Fed kind of started to say, okay, well, we can't keep expending this money so much. So they started contracting, and that's what we've been seeing in the markets is a lot of assets, not just Bitcoin, are measured against the dollar have gone down because they're tightening the money. They're essentially not making as many loans as they were before. And when you have tight monetary policy, less dollars sort of chasing the same amount of goods, then you're going to get higher price. You're going to get lower prices against that. So, we saw the enormous asset inflation during the early days of the pandemic, and now it's like coming down again. So you can kind of see this in meat prices and things like that. Wood lumber was like really, really expensive at some points during the pandemic, but it's come back down, and it's because they're shrinking the supply of money to some degree, and that interplay is what we're observing. So what we've seen in the markets is exactly what we should expect. When they expand the money supply, Bitcoin goes up. When they contract the money supply, Bitcoin goes down, right? The thing is, over any sort of long period of time, the monetary supply expands, and not by just a little bit. It's usually by a significant amount. One way you can measure this is looking at the M2 money supply. And in 1959, the M2 money supply was $289 billion. And that sounds like a lot, but that's all of the money that existed as measured by M2. And currently, it's somewhere around $22 trillion. So if you compound that or something like that, it ends up being like 7-8%. That's the rate of annual monetary expansion, which is the classical definition. Thing is, they printed just so much money during the pandemic that they're having to sort of like balance the insane money printing that we did with sort of current monetary policy. So from something like March of 2020 to like September of 2021, I think M2 money supply went from like 15 trillion to 21 trillion, and it hasn't expanded quite as much since then, and for good reason, because everyone was starting to panic about inflation, so they sort of like slowed down the money printer significantly. So that's sort of like it's basically a lesson in supply and demand. There was a massive supply expansion of money, which made it less valuable, but then now there's supply contraction that's been happening. Which is why we're seeing the Bitcoin price go up and down. It more or less correlates, as with every other asset, with what's been happening with the Fed.
And when you say money's being printed, and
Mm-hmm.
that's a big topic,
Mm-hmm.
for a regular person that doesn't understand monetary policy, like what does that mean? Like what does it
Mm-hmm.
mean that money is being printed? And when you say, the money supply has gone from 289 billion to 21 trillion, like that's a huge delta. Like what does that mean?
Yeah, that's good. That's a good question. So all of the money that exists keeps expanding. That's basically what it means. Now it used to be in the old days that they had to physically print the bills because all was cash. So, for example, during the Weimar Republic, the money printers were going at it nonstop, like every day, literally printing money. It's a lot different now because most fiat currencies are digital and they can expand it. But the way that they create new money isn't that obvious to most people. The way it used to be with like straight up fiat money, Revolutionary War, with the Continental, right? Like there's an expression that came out from that era, which is not worth a Continental, and that's because the Continental was the currency of the new republic, of the new American Republic. But unfortunately, like they printed way too much of it, so in a matter of like 2 years, what it expanded by like 1000x. So what you could buy with one Continental ended up costing 1,000 Continentals by the end of like that 2 year era. That's like straight up fiat money. Central banking's a little bit different in the sense that the new money is created through loans, and this is not something that most people really understand. But let's put it to be let's make it as practical as we can. So you need a mortgage, right? You want to buy a house, you need a mortgage because you don't have the money to go buy the entire house with cash. Um, what do? Well, you go to the bank and apply for a mortgage, and usually they check your credit score and your employment history and your income, and they put it into some formula, and then they decide to either give you a mortgage or not. But say that they give you the mortgage. Um, you have to put 20% down, and you get a loan for 80%. So say the house costs $500,000, you would have to pay 400,000. You would have to get a loan for $400,000, and if you have the 100,000, then that all works. Now, where does that $400,000 come from? A lot of people think, oh, it's coming from somebody's savings. The way it works is that there's a bunch of people that are depositing money to the bank, and I am getting some of those deposited funds for my mortgage. Except once you start looking into it, I mean, that sounds like that's probably what you learned in grade school about how banks work is they take deposits and they lend it out, and the difference is the bank's profit. Except if you run the numbers, you quickly realize that that doesn't work. There's no way they can pay all the bank tellers and the giant buildings and vaults and ATMs and security guards and parking lot spaces even with that kind of thing. No, what they actually do is something called fractional reserve banking. They lend out way more money than they get in deposits. And there used to be a ratio where you had to put 10% in reserve so you can lend out essentially 10 times the amount that people deposited with you. Now that reserve ratio is essentially infinity, so you can lend out as much as you want. But that's how money comes into existence. And when you get that $400,000 mortgage, that is not from somebody's savings. It's newly created money that comes into existence for your benefit. And if you just think about it for a short second, right? Like, think about what a mortgage is. It's $400,000. I think the interest rate on a 30-year mortgage right now. Think about the other side of the trade. Would you invest in a mortgage on the other side of the trade? And think about the investment terms of something like that. It'll take you 30 years to get it back. It's going to be 4 or 5%, and it has to be $400,000, right? Like, is that enough of a return? Like, most people would be like, you're crazy. Like, I can get way better returns than that. So how is it that this is happening? Well, like, no one would take the other side of the trade. So how is it that's happening? Well, the answer is it's printed into existence. And this is how most loans in the fiat economy work is, when a commercial bank, is able to get like a 3%, 3% bond, right? Some large company for like $100 million. Like, what's actually happening? It's all printed money, right? It's all created money. And they always come in the form of loans in a central bank debt. But this goes all the way up to, the federal government level. How is it that Congress can have a budget of $6 trillion and only have tax receipts like $4 trillion? Where's the other $2 trillion come from, right? Like, who's giving them this money? Now, we tend to think, oh, it's government bonds, and there's a bunch of people that buy these government bonds. I mean, have you looked at the interest rates on a 10-year Treasury? It's like 2% or 3% or whatever. Who's taking that side of the trade? Why would you lock it up for like 10 years at 2%? That's an insanely low return. And there's not nearly enough people that would do that it would add up to $2 trillion, because that's a significant amount of money per person. It's you just do the math. There's like 50 million people in the US, maybe 150 million that are working adults, something like that. And you divide it, you divide 2 trillion over 150 million is what, like 2 million over 150, 200,000 over 15. It's like $10,000 a person. There's not anybody like, buying $10,000 worth of bonds. Like that's not happening on average for every person. What's happening is that money gets printed. It's the Federal Reserve puts it on its balance sheet, and now Congress has the extra $2 trillion. That's what's happening, and that's how money expands in a central bank backed fiat monetary system. And it's not something most people know, but that's how it works.
And why do you think we've gone to a place where the education of money isn't part of our system? Like, why do you think the illusion of money is not really being talked about as much? Because every time I hear these stories, I wonder, like, why don't we know about this more?
Yeah, great question. Essentially, there's no incentive for the system to tell you how it works. I think it was Henry Ford that said, if the people knew how the monetary system worked, there'd be riots tomorrow. And there would have been, at least back then. But it's sort of like several layers of indirection based on this, because they think, oh, you're just creating a loan and it's temporary or whatever. Actually, like, you look at U.S. government bonds or whatever, it's literally like like rolled over every time it expires. So it's sort of like debt in perpetuity. And you know this because there's like a $30 trillion national debt. And that's just the accumulation of these budget deficits, and that's not paid off ever. So the money doesn't really contract on that basis, and it just continues expanding. Now, why don't we know more about this stuff? Well, I mean, there's a lot of people that have been trying to explain to people, but the thing is, like, we're not really in a place where we can really understand it. And there have been a lot of books and so on, but the fact of the matter is, a lot of people don't want it. Right? They're like, oh, my money works, so who cares about all this other stuff? And then they see inflation and they're like, they want to blame somebody. Usually you end up with ridiculous policies like rent controls, price price ceilings and things like that, which end up making things much, much worse. But you're starting to see that. You're starting to see a lot of these ridiculous and stupid policies, make their way where, politicians are blaming greedy merchants or something like that, rather than, being properly blamed, which is, well, you spent too much money, you printed too much money, and there's more dollars chasing the same amount of goods, and now they're trying to sort of put toothpaste back in the tube by contracting a little bit, or having raising the interest rate so that the amount of loans that go out are less, and so on. And that seems to be the strategy, but they don't want you to know, because they want to keep printing the money. They want to have stupid laws like the Inflation Reduction Act, which costs like what, 750 billion or something like that, like some ridiculous amount of money. And they want to be able to do that, so they don't let you.
And do you think there's an opportunity? I mean, it feels like it's a function of education. There's a system that's like an education is broken, and Bitcoin is this interesting hedge against these things. But like, why do you feel that people just don't want to be educated about these? Like, it feels like they want to kind of ignore it in some ways, of like, this doesn't exist or this doesn't happen.
Mm-hmm. Yeah, and I think we got our answer during the pandemic. I'm sure anyone listening to this kind of knows like what happened on social media. There was a large group that just did everything the government said, right? And some uncomfortable questions started coming up about like, was this really necessary or whatever? And there's a minority, I think, of people that were asking those tough questions and sort of wrestling with it. But there was also a majority that was just sort of like, I don't want to know about it. I just want to kind of do what they're telling me, and quote unquote stay safe. There's a comfort in sort of following the authorities, in doing what they say, rather than in sort of thinking for yourself, and not having all the answers, because the authorities will always have all the answers. There's a comfort in that, right? Even if it doesn't like square with your reason or whatever. And there's a discomfort in questioning, which unfortunately a lot of people don't like that discomfort, so they don't go down that rabbit hole. So I think that's what we've seen in the pandemic. So it's no surprise people have that sort of same filter and line towards money.
I totally agree. I think that my education around money, funny enough, did not happen until I decided to really understand what Bitcoin was. I had the blessings to sell my company in 2016, but I didn't really understand what it meant to receive this like what that money actually was, and how it was created, and the market dynamics of how it was created, and that if more money is printed, typically the price of assets will go up to a very massive, like there's all these cycles, and I didn't get to really understand it until Bitcoin. Now, let's go back and hone in a little bit on Bitcoin. Why do you think it's so important for people to understand this sovereign asset? Like, why is Bitcoin so important for the world, particularly at this time?
Yeah, once you understand how the current monetary system works, you very quickly realize, like, okay, I'm just getting screwed every time, right? Like, they print money, your savings is the base. There are all sorts of secondary effects, which I write about on Bitcoin Magazine, about how the base is job, healthcare, education, all sorts of other things, because you have this money printer and all of these wrong incentives that go awry. So when you ask, like, okay, why is Bitcoin important? Well, it's because money is a base layer of civilization. That's at least the way I look at it, which is that everything sort of functions based on the money that we use, because it's one half of every trade that we make in the market. So whether you're selling something or buying something, whether it's your labor that you're selling or good that you're buying or whatever, money is half of the trade. And if you have a corrupt money, what ends up happening is that everything built on top of it has some of that same corruption. You're building on essentially a very unstable and easily knocked over foundation. And I'm not just saying this. It's just, you can look at history of fiat currencies. The average sort of lifespan of any fiat currency is something like 23 years. It's really kind of bad, and you can clearly see that if you study this even a little bit. But when you have a more solid foundation, you're able to build up a much better civilization, and that is a very important thing, especially in crazy times, right? Like, I think to a large degree, what exacerbated the pandemic was the ability of government to sort of compensate you for all of the suffering that you were under during the pandemic. They basically said, okay, I know like a lockdown is really hard on your business, so we're just gonna give you these PPP loans. Or I know the lockdown's hard on your income, so we're gonna just cut you these stimulus checks or whatever. And that's like purely money printing. They're robbing Peter to pay Paul. So it ended up giving you the illusion that you're getting something for nothing, but the piper came in the form of inflation that we've all been experiencing. And that sort of like corrupt system essentially like shut down the world for a couple of years, right? Like and those are the consequences of having fiat money around. And it's not just stuff like the pandemic. The most obvious reason for printing lots of money and fiat money, and the original reason why it became so popular, is war. World War I was the first modern war, as they say, and it was so devastating, not because there were so many new weapons. In many ways, it wasn't very different than wars that happened even a few years before. What made it so devastating was that there was this ability to keep printing money for all the weapons and stuff. It used to be that under a more hard money standard, that every sovereign had to go and tax their subjects in order to fund the war. And if you ran out of money, well, no one would lend you money, and taxes would be extremely unpopular. So they'd have to sue for peace. So wars were generally limited. But with World War I, both sides of the conflict were able to just print money to keep funding their army. So it went to a level of escalation that was very ahistorical. It wasn't like something that was normal before then, and that's what ended up like sort of making the devastation of World War I so terrible. And similar thing happened in World War II with what happened. Both sides essentially printed tons and tons of money. So the reason why Bitcoin is so important is that a lot of these abuses of the state that end with millions and millions of people that die are essentially enabled by fiat money. And if we can take that power of the state away, then we can make the world way better. And that's the argument. That's civilization is built on a terrible foundation of fiat money, essentially, where the government can change the rules whenever and force you to do whatever. That's not a very good way to live, and Whereas with Bitcoin, you have self-sovereignty, and each individual gets to decide, their own fate way more than authorities.
Sure. So one of the things you said is like take the power of the state away. And this is something I'm always in just general, I'm always trying to understand what that means. So walk me through, I mean, because you're such one of the most brilliant thinkers in the space, like walk me through the step-by-step process on how we actually do that. Because one thing I can never wrap my head around is, okay, ultimately the system is still in control, right? And ultimately we all do things through exchanges. And if the government one day decides to make Bitcoin illegal or ban Bitcoin, it kind of makes it in some ways irrelevant, because you're like, how do you gonna, it's illegal, I can't hold it. So walk me through the process on how this does kind of, it is better, it's a better version of money, we understand that, but how does it actually change the system? Because in those end states, they still have guns, they still have airplanes, they still control most of the things. Like, how does this actually happen?
Yeah, so a lot of capital goods, weapons, things like that, they are in the hand, and they have to buy this stuff. And this is where economics comes in. Whatever the government has, they bought it, and right now they can buy whatever they want because there's fiat money. They have access to the money printer. If they decide to increase the military budget by 5 trillion tomorrow, they can. And they'd obviously buy way more weapons. The thing that changes once you're under a more Bitcoin standard, and as the market sort of changes, I think we'll see more of this, that you can't quite print the money anymore without debasing your currency significantly. Now, the US has been able to print more than other countries because they're the reserve currency of the world, and there's naturally more demand for it around the world. But if you have something like Bitcoin internationally or whatever, it's a harder money, and people are going to start saving in Bitcoin rather than in dollars. So the demand for the dollar shrinks. You can't just print your way into buying all of this stuff quite as much. And this was sort of like how governments ran before fiat money. So the reason why you didn't have such devastating wars before World War I was because the world was on the gold standard. And at that point, if you want to do a war, well, you have to buy the guns. And in order to buy the guns, you have to pay the merchants, right? You have to have the funds. You can't just print it into existence. Well, where do you get the funds? Well, you have to tax the populace. But you have lots of other needs, right? Like you're maintaining roads or whatever, and you have to balance all of that, and that essentially made it so that it became very expensive to keep a war going or to pay for all of that. Once you throw economics out the window and say, oh, we're going to do as much as we can to win this war, which is what happened in one, then everyone. But by having hard money, you essentially take away the power that the state has of just like doing implicit taxation through inflation. Instead, they have to go and tax people. And this is where, you get revolts and stuff like that. It's not a coincidence that the Revolutionary War was, started on taxes. Almost every government fears explicit taxation because it's so devastating for most people in power. People don't like having their wealth taken away from them. So by having something like Bitcoin, I think what it does is gives you an alternative. And instead of being forced to use the dollar, you have some other way. And that means that they can't just sort of print money all the time. And that hedge that people have, that alternative that people have, as it grows, well, that becomes part of your wealth. And if they did try to make it illegal, people are still going to want to hold on to their wealth. They're not going to automatically be like, hey, you know what? I'm just going to sell everything. I mean, there are certainly people that will, some people that will. But even during the gold confiscation days of FDR, a lot of people kept the gold, right? Like it was illegal to own more than 1 ounce of gold back in 1933, but a lot of people did because they didn't want the government taking their gold away from them. So I suspect that, you know, it'll hurt Bitcoin for at least a short amount of time, but if it survives after that, I mean, what more can they do? I think you see a giant price rise after it survives something like a ban, because this is the sort of politically neutral, you know, unconfiscatable store of wealth, and it proves that use case. You know, and eventually, I think governments are much more restricted in their spending ability, and that in turn means that they don't have as much power because they can't just print it into existence.
Yeah, and I totally agree with you. My question is the 0 to 1, right? Because
Yeah.
I agree that it's better, and I agree that if it becomes the standard in some ways, what is the 0 to 1? And I make this comparison, and I'm going to put a video out. I did this in a presentation a few weeks ago. Like, I feel like Bitcoin needs its Bretton Woods. And the proxy for Bretton Woods was that the dollar became the way that you buy oil around the world, and the dollar became the petrodollar. So you needed to use dollars to do the most important thing, which was energy. The question is, what is the moment that you see that will allow Bitcoin to transcend, to become that standard? I mean, that's the thing, that's the jump for me, that I'm still trying to, like, as a mental exercise, to figure out what is that jump. What, you know, right now people hold it mostly on exchanges. Some people have their own flash drives at their house and they keep their private keys there. What is that jump moment? What makes the world a Bitcoin standard world?
Yeah, and this is, I think, where I don't see it as a 0 to 1 moment. It's each individual deciding for themselves. So I'm on a Bitcoin standard, right? Like I have Bitcoin, and I measure my wealth in Bitcoin and so on. And it happens sort of like one individual at a time. Now there's a small group of people that sort of think that way. Certainly not even all of the Bitcoin holders. It's probably a small subset of that. But that group will continue to grow because you do have this ability to store value in something that's not debased away from you. Once you recognize.
Well, yeah, when you say you're on a Bitcoin standard, what does that mean for the audience? Like, you live on a Bitcoin standard. What does that mean exactly?
That means that I hold my wealth in Bitcoin. I measure my wealth in Bitcoin. I don't. I try to have a minimal amount of USD, and I convert as I need to pay for stuff. And you know, I take payments in Bitcoin if I can, in whatever goods and services I provide, and so on. But I see Bitcoin as better money, and I've made that decision for myself. Now, obviously, the rest of the world doesn't things that way, but there's enough of us that it doesn't have to be 0 to 1. It's just, you know, whatever proportion of the world is like that, and that continues to grow, and you can see it in the price. It exceeds sort of like the monetary expansion of the U.S. dollar. It's also on top of that, there's, you know, significant adoption as, you know, your store of value, and you know, as that expands, you have sort of like an economy of people that see things that way. For them, Bitcoin already is their standard, and once there's enough of those people, then I think the world is on that standard, right? There's and that's how it happens, is not sort of like a sudden, you know, state change, but it happens at the individual level, and it happens on a person-to-person basis. And you know, I don't want to keep like, especially with the inflation that we're seeing, I don't want to keep my money in dollars. I want to keep it in Bitcoin, especially over, you know, more than a year horizon, because I think the dollar is going to continue to expand. Whereas with Bitcoin, I'm protected against that. The more people think that way, the more of a Bitcoin standard that we're on, sort of by default.
But what about the people that are buying into Bitcoin now, right? So you've been in Bitcoin for quite a long time. There's this thesis that your basis is much lower than another person's. And ultimately, like, even if you get paid in Bitcoin, you're still denominating that in dollars before you get the Bitcoin sent. For example, if something says, "Oh, okay, for me to do this, it's going to cost you $100, but I need you to send me this many sats because that's the dollar denominated in Bitcoin." I understand that, but what about if for people's basis that is so high and they're like, "Oh, you know what? I got to buy a Bitcoin. It's 21,000, yeah, 21,423, which is my hawk behind me." Like, how do you look at that as your basis is just so potentially much lower than other people?
Well, I mean, you're operating on that question sort of assumes like a dollar standard, right? And again, if you're measuring everything in the dollar, then yeah, that kind of makes sense. But once you flip to sort of Bitcoin standard, it's okay. Well, this much Bitcoin buys this sort of thing, and my overall dollar cost average of Bitcoin is significantly lower than the current price. But I still get paid in Bitcoin. So like all the new money that I'm transacting with, I convert to Bitcoin for the same reason that I did very early. It's a better store of value. So I mean, if you're operating under a dollar standard, you're thinking of things in terms of their dollar value, thinking that it's stable, but that's all an illusion. We know that the dollar is expanding, that a $7 ribeye from 3 years ago, it costs like $18 now, right? Like there's a significant difference, and you can see the change in the goods, and I would posit to you that actually, like, the dollar standard is a terrible way to measure how your own wealth, because the amount of money is changing constantly and up to the whims of central bankers.
And for the people, and I agree. I think if you're holding dollars, you're not doing well.
hmm
What is your thoughts on other assets like houses and gold and other things that people are like, well, this is a historic store of value, my home, the place that I live. How do you denominate those things in a Bitcoin standard?
Well, I mean, I think you denominate them just like how you denominate things in a dollar standard. If you're under a dollar standard, you say, okay, I have like $50,000 in stocks, I have $100,000 of equity in my house, and I have $5,000 worth. My car's worth $5,000. That's how you denominate your wealth. You do the same thing under a Bitcoin standard. Okay, my 401k is worth this much Bitcoin, and my house is worth this much Bitcoin, and my business is worth this much. And it's like it's the same calculations we make. It's just denominated in Bitcoin. I don't see necessarily any problem with that. I think that's okay, and it'll probably lead to better behavior because it's not going to buy sort of like a shrinking amount of things like you do with the dollar. So if you denominate it with the dollar, you think you're getting richer, but you're not, right? Because the number might increase, but it buys less stuff, and that's what's been happening the last few years. Whereas with Bitcoin, the number might stay the same, but it'll buy more stuff, and that's been the case for most of the people that have been in Bitcoin for a while. And that gives you sort of like a very different mentality because, oh, okay, well, I have enough to take a risk for the next couple of years instead of I need to constantly keep up because it's going to buy less stuff a year from now. And that's sort of like that fiat rat race that a lot of people end up in is, I joke that you have to make your money twice in the fiat economy, once to actually go and earn it, but a second time to keep it because you're forced to be an investor, a risk taker. And when you talk about a lot of these other assets, they're heavily inflated, not because of their intrinsic worth. Like a lot of stocks went up like crazy during the pandemic, not because they were doing more sales or revenue or earning more profits, but because people didn't want to keep it in the dollar, so they would buy these other things. So they all have sort of like this store of value premium, which I think are, Bitcoin sort of takes away that store of value premium from a lot of those things. And
but didn't Bitcoin also have that store of value premium because it went all the way up? Like if you look at the proxy of, if you look at the chart of dollars printed, asset prices, Bitcoin follows the exact same chart of when stocks peaked, the money supply peaked. So how is it different if it follows the exact same pattern?
Yeah. So these other things are basically, they are other uses, right? Whereas Bitcoin is meant to be a store of value, and it functions much better than that. Now, you could store your value in a house, but everybody knows that houses are not fungible, right? Like two houses next to each other can have radically different values, even if they're architected the same, because you have more acreage, or it's on a hill, or there's a driveway, or it's a little closer or it's in a different school district or whatever. I mean, it's a terrible store of value for a lot of those reasons. Similar thing with stocks. There's all sorts of risk that comes in with stocks that you have to take on, like the CEO being corrupt and embezzling money or something like that, or the SEC coming in and charging them with something, or the government saying, okay, well, we're going to make the business that company was in illegal. Like, for a lot of those reasons, it's a terrible idea to store value in these other things. It's not fungible. You might, there are all sorts of risks associated with it. And, they raise the property taxes in one, in where you happen to own a home, and suddenly your, the value of your home decreases or whatever. Like, Bitcoin is much simpler, right? You just buy Bitcoin. You don't have to be doing all this research on which stock to buy or which real estate to have. It's just a much better design, and it's a much better store of value. So I think that's where store of value goes, is not in these other things that aren't meant for that purpose, like real estate or stocks. Real estate is for, like owning land, right? Like making it productive. The reason why you own a house should be so that you can go live in it or whatever, not because it's an investment thing, which unfortunately has been the case in all sorts of places. Causes all kinds of malinvestment. You can look at like all these ghost cities in China and all these unfinished apartment buildings. No one lives in a lot of this stuff because there's such a demand for real estate as a store of value that people built stuff that no one was using. That's called a malinvestment. What's better, if you build stuff that people will actually use, or build stuff that no one's using? Like, it doesn't make any sense. So in that way, you want something like Bitcoin to be the store of value and not these other things, because they're not meant for that purpose.
As we're going to get ready to wrap up in the next few minutes, what do you think is the most important thing for our, the Zion community members that are, we have a lot of people that have joined Zion, they're part of the community, but they don't really know a lot about Bitcoin. Like, where do they go to get some more information, to feel really comfortable about not just this asset, but why this is one of the most important things in the world?
Yeah, there's a lot of books for this purpose, and I've published a few myself. And depending on sort of what direction you come from, there's a lot of very good introductions to Bitcoin. So I've written 3 books that I think are fairly appropriate. The Little Bitcoin book, Thank God for Bitcoin, and Bitcoin and the American Dream. And they all come sort of approach Bitcoin from a slightly different angle. If you want like a moral Christian perspective, Thank God for Bitcoin is for you. If you want like sort of like a political perspective or a regulator perspective, then Bitcoin and the American Dream is for you. If you want sort of like a human rights perspective, an international perspective, the Little Bitcoin book is for you. And those are just the ones I've written. There's many other books. If you want like a more economics driven introduction, you can meet the Bitcoin Standard or VJ's book, like The Bullish Case for Bitcoin and so on. There's literally hundreds of books at this point that give you a very good overview. The one thing that I would say to people that don't know is you're going to have to put in some time, and you're not going to get this knowledge for free. And it might seem hard at first, but you're going to have to put in the work to really understand. And it's a lot like the fiat monetary system. You're going to have to study it to really understand it, and you're going to get a much better view of that if you put in the time. Unfortunately, a lot of people just think, it's the same thing as a stock, and sort of like leave it at that and have the wrong mental model for Bitcoin, when in fact it's something very different.
It's something very different and very special. Jimmy, thank you so much. This was so educational. I mean, for me, I pressed you on a couple questions, and I think it gained my knowledge so much, and I'm sure the whole Zion community felt educated by it. Thank you. Appreciate you guys. We'll be back next week with another episode of Zion AMA. This was Jimmy Song. Thank you so much.
Thanks.